Hi, this is Daniel with Unrivaled Investing. Today I'm going to talk about Berkshire Hathaway. Did they just make a huge bet on gold? Almost. Let's dig in. First, here's a disclaimer. You can read it on your own time. So what actually is the news? So we're talking about Barrick Gold. So they did make an investment in a company with the ticker is GOLD, but the company is actually Barrick Gold. Berkshire Hathaway bought nearly 21 million shares, over $500 million. It's less than 1% of their portfolio though, so it's really not going to move the needle. But they did buy 1% of this company at an average price of about $27 a share, which is around the same price that it closed at on August 14th when the news came out. It should be pointed out that it's not necessarily Buffett who made the purchase. It hasn't been clarified. It could have been, one of his top lieutenants, either Ted Weschler or Todd Combs. They each managed somewhere between, like $5 and $10 billion. So they could have easily done this slug themselves. But also, what is gold? And we'll dig into that in a second. What is Barrick Gold? But before digging in, my mission is to help you on your financial journey, by educating and sharing my own personal financial journey. I approach investing through a lens of finding potential multi-baggers or companies that I think can go up hundreds or even thousands of percent over time. I believe I find these types of companies, and I found a few multi-baggers myself over time, by finding companies with an unrivaled value proposition. What is that? That means you have a good or a service that no one else offers. And when you have an unrivaled value proposition, it gives you the right to win. There are a couple of logos on the bottom of the screen. Each of those are, either potential multi-baggers or they were multi-baggers. Livongo is up, 4x since my cost basis. Novacure is something that I've penciled out as something, a company that could potentially go up 10x. So if you're interested in either improving your own financial journey or following, the type of companies that I think are potential multi-baggers, please hit that subscribe button. And if you're already a subscriber, hit that like button. So what is Barrick Gold? Barrick has gold and copper mines around the world. You're looking at 13 countries, North and South America, Africa, and it goes on. So they're saying they have a diversified portfolio, high margin, long life assets, aka they own mines that are profitable, low cost, relative to the price of gold and relative to other miners. And the amount of gold reserves that they think they have is not going to expire, let's say, in the next year or two. Long life means many years. So it trades on the New York Stock Exchange as well as the Toronto Stock Exchange. So why is this news about Berkshire Hathaway buying Barrick Gold so surprising or so interesting? Well, what has Buffett said about gold in the past? Now, this is the commodity. He says it gets dug out of the ground, then we melt it down, dig another hole, bury it again, and pay people to stand around guarding it. It has no utility. Anyone watching from Mars would be scratching their head. Okay. And then he also, says Buffett on gold. He's saying it's an unproductive asset. This is very much in the same vein. It will never produce anything, but are purchased in the buyer's hope that someone else will pay more for them in the future. So it's sort of a fool's errand to buy gold because you're hoping that a greater fool will come around and pay more for what you're just buying. It's a useless asset. Buffett is pretty much pooping all over this concept of like, hey, you should own gold. Instead, focus on productive assets, and that's what he's done. Find companies that can grow over time, but he's sort of poo-pooed gold. So if Buffett doesn't like gold and yet Berkshire is buying Barrick, what does this imply for Barrick and gold? Because I think there are a lot of interesting potential ramifications or thoughts that go with this. The first level implications for Barrick is that Barrick must be one of the best run and lowest cost gold mine operators in the world, and that is the case. I mean, here's a chart from their second quarter results where you can see how much is being produced, the cost of sales, their all-in sustaining costs. So, aka, how much it would cost for them to keep going, to keep the mine sustained, and they're showing about $1,000 an ounce. To put that in perspective, gold is currently closer to double that in terms of its price. So they are operating their cost basis. That's going to be some nice fat margins for Barrick. But at the end of the day, it is a commodity company. They're a mine operator, and their results depend on the price of gold. So that gets to this other aspect. So what are the implications for gold? You can buy gold as an ETF, like but making a bet on the commodity by buying like the ETF ticker IAU. And in full disclosure, I own that. And if they own a gold miner, so if Berkshire Hathaway owns a gold miner, they're willing to underwrite the price of gold. I.e., they don't see a reason for gold prices to be materially lower in the future. So that's, they are making a bet by owning Barrick uh, that they don't think gold prices are going down in the future, because if gold prices go down, then gold miners are definitely going to get hit. So why is gold prices going up, and why are they confident that it's not going to go down anytime soon? And there's a theme going on around, money printer goes brr, it's Jay Powell at the head of the Federal Reserve. And it's seen another way is the Federal Reserve's balance sheet is completely blown up since COVID, sort of came rampant in the United States. And you can see that the balance sheet expanded by $3 trillion. This is like 3x what you saw in 2009. This is a huge amount of stimulus that you're needing to see. And this is just the Federal Reserve. You also have, the Treasury as well, which is running huge deficits. So why is this important to you, understanding that the amount of money being created out of thin air is trillions and trillions of dollars? Why is this important to you? Um, it's important to you also because Berkshire is not the only one. So you should be thinking about this. Like Ray Dalio at Bridgewater, who I consider to be really smart, really thoughtful. I really recommend his books, especially the one on debt crisis. During the second quarter, he also bought nearly $500 million. They're boosting their investment in the gold ETF. So not Barrick Gold, but focusing exclusively on the ETFs versus the miners. They're boosting their investment to over $1 billion. That there's another smart money making a bet effectively that says, I don't think gold prices are going down. So why, you see two major titans, two billionaires, making bets on this. This is, it certainly should get your spidey sense tingling, trying to figure out like what is going on. And why is this important to you in your financial journey? In a world of Tina, or there is no alternative. And that's what the Federal Reserve has done by lowering interest rates so significantly, and by being in a world where rates are so low. You have anemic bond yields. So that means if you want to find high yield debt, you're not going to find it. You can find junk bonds, but even those junk bonds aren't high yield. You're talking about single digits. If you're looking at treasuries, it's pretty much zero. Corporates are 1, 2, 3% above treasuries. So you have nothing, you're earning anemic bond yields. Forget cash. You're getting zero on cash. And then meanwhile, because it's a world of there is no alternative, because bonds are at zero, it's forcing investors to go into stocks. So this is pushing record equity valuations, where anything that has a pulse is getting bid up. Any company that has any sort of distribution to shareholders, companies are getting bid up. You're seeing record valuations for, honestly, some companies that really don't deserve it, but because they pay that cash out as a dividend, there is no alternative, Tina. And so, you're seeing this record equity valuations, for a lot of companies that honestly doesn't make sense. And, this is important to you in your financial journey, because you need to be able to imagine multiple different scenarios. It's common for us just to focus on the rear view mirror, but the reality is your returns are driven by what happens in the next 5 to 10 years. And one possible scenario is, imagine if inflation spikes to 5 to 10%, or even 5 to 7%. Imagine if inflation just spikes a little. If that happens, that can result in a dramatic reset of everything. I mean, imagine if the Federal Reserve had to hold rates low while inflation actually spikes up. I mean, then at that point, the Federal Reserve is powerless, because they keep targeting, we're going to do around 2% inflation. If you see real inflation spike up to 5-7%, that means they've lost it. They are done. They can't do anything else. Or at that point, they're making the deliberate trade-off to encourage even more inflation, which is not really as palatable for the general public. And in that scenario, all these stocks that are being valued on zero bond yields have a dramatic re-rating lower, because all of a sudden you might have a real, opportunity cost. Because inflation spikes, you might have, banks having to pay a couple percent in cash. Who knows? So if inflation spikes up, I would expect equity valuations to dramatically re-rate. I'm throwing this out as one possibility, but this could happen when you have multi-trillion-dollar deficits. And that's sort of the question of, like, what should you be going into right now? You have equity valuations that are expensive, bond yields that are negligible. So gold might be an intelligent diversifier. You don't want to hold a lot of cash. I mean, unfortunately or fortunately, I'm holding a good chunk of cash in my portfolio waiting for better equity prices. But I don't want it. I don't want US dollars to be 100% my cash position. So I do diversify out of some of that by owning gold. And to that point, if you go to unrivaledinvesting.com, you can track my personal financial journey, and subscribers of unrivaledinvesting.com, subscribers to my journey, know that gold is actually a top 10 position for me. It's done well since I've been buying it. I've been buying it over the last year. So this is something that, once it became apparent that the money printers would go burr, as you saw that image earlier, gold really does seem like as an intelligent diversifier, just in the event that the odds of inflation are picking up. So for the DIY investors that want inspiration for their own financial journey, I highly recommend going to unrivaledinvesting.com. And if you enjoyed this video and are interested in finding potential multi-baggers, or just enjoy, investment commentary, please hit subscribe. And if you like this video, please hit the like button.